Building on its growth momentum, China's AngelAligner technology has solidified its position as the fastest-growing clear aligner manufacturer globally. The company has succeeded in significantly outperforming its category peers for 2 consecutive years straight, mainly driven by growth in international markets outside its home country, China. In recent years, AngelAligner technology has continued to grab market share in the global clear aligner market, significantly beating other leading clear aligner brands in key markets. The company is relying heavily on a range of discounting tactics to fight off competition and turbocharge its customer acquisition strategies, including price reductions, offering unlimited number of refinements, and even retainer subscription programs. Of course, this strategy is eating into the company's profits, but it's obvious that AngelAligner is willing to capture market share at the expense of its current margins, especially because the brand may benefit from consumer preference for discounts. In the first half of 2025, the company reported a 33.1% increase in revenue on year-over-year basis, significantly overperforming the global clear aligner industry. In the Chinese market, however, revenue grew only by 0.6% in 2025, according to insightsZ estimates. On the other hand, AngelAligner's growth in international markets drove overall top line as revenue increased by 123.3% during the same period. Early 2025, the company announced that it will open its first U.S.-based clear aligner manufacturing facility in Oak Creek, Wisconsin, as a part of its North American manufacturing expansion plan. Based on the company's PR, the 52,000 square foot facility was expected to create up to 80 permanent jobs, and the move was expected to protect the company's growth ambitions in North America from the ongoing tariff wars. Additionally, the company also pledged CapEx investments in its Brazil-based manufacturing plant to support the company's growth story in the Americas region. Fast forward to today, AngelAligner still continues to use treatment planning center and manufacturing sites based in mainland China for its clear aligners shipped internationally, including centers in Brazil and Southeast Asia, which are still currently providing treatment planning services for the United States. That's not all. The company recently disclosed that it doesn't have any other future plans for material investments in capital assets in near term. Even though the company announced that they are in the process of expanding manufacturing footprint in North America, AngelAligner's H1 2025 CapEx investment of $17.3 million was allocated almost exclusively for Chuangmei Center's plant, property, and equipment. To summarize, insightsZ looked at the company's cash flow statements from the past 30 months and found that no significant investments have been made for these projects until today. July 2025, AngelAligner completed a strategic investment in Shuyaqi, a clear aligner brand known for its cost-effective products and extensive clinic network to accelerate market penetration. This development is expected to increase AngelAligner's market share to lower-tier markets. insightsZ looked at the company's cash flow statements and estimates that AngelAligner Technologies' investment in the joint venture is approximately $4 million. Until 2023, AngelAligner was present in 30 markets globally. In 2024, the company entered 20 new countries, raising its geographic footprint to more than 50 countries worldwide. The company's revenue across its international markets grew by 2.2x, from $32 million in first half of 2024 to $71 million in first half of 2025. This also includes revenue contribution from Brazil-based Aditec, which the company acquired in Q4 of 2022. Based on the year-over-year revenue trend, insightsZ estimates that AngelAlign's revenue from international markets will exceed its revenue from its domestic market by end of 2026. In first half of 2025, AngelAlign was clearly hyper-focused on driving top-line growth that's coupled with stringent cost control. This enabled the Chinese manufacturer to reduce its operating losses by approximately 60% on year-over-year basis. The fact that AngelAlign technology is still using treatment planning center and manufacturing sites based in China enabled the company to maintain its gross profit margin of 62.4%, which is stable versus previous year. However, the company did succeed in improving overall gross profit by 32.9% to $100.6 million during this period. It's also worth mentioning that AngelAligner's gross profit margin percentage is significantly below compared to its renowned peers, including Invisalign, yet it demonstrated highly stable YoY performance. In first half of 2025, AngelAlign's selling and marketing expenses rose to $53.8 million, recording an increase of 11.3% on year-over-year basis. This was primarily due to the increase in sales and marketing activities in international markets outside China. As a matter of fact, the company didn't spend any additional dollars to add more employees in its international subsidiaries. Instead, any additional marketing and sales budget were spent on brand marketing campaigns and customer acquisition. In 2024, AngelAlign hired 1,096 additional employees to support the company's growth in international markets. However, during the first 2 quarters of 2025, the company optimized its number of full-time employees as AngelAlign reduced its total headcount by approximately 1%. Unsurprisingly, the company's sales expense ratio, which represents the percentage of selling and marketing expenses to company's total revenue, decreased from 39.8% in H1 24 to 33.3% in H1 25, which is an indicator of highly optimized marketing performance mix. AngelAligner's share of search has gained strong traction in key markets across North America and Europe, including US, Germany, Italy, and Spain. Not just that, the acquisition deal involving Aditec Orthodontica enabled AngelAlign to gain a strong share in Brazil's share of search market. Global category leader Invisalign continues to occupy the #1 spot in U.S. share of search market and has demonstrated very stable performance over years in key markets, leading all other brands by a significant margin. However, other clear aligner brands including SureSmile, ClearCorrect, and AngelAlign are making notable gains, fueled by shifting consumer preferences in targeted marketing campaigns. Especially among recent market entrants, China-based AngelAlign has succeeded in gaining a significant share of search in the U.S. market, demonstrating a strong brand traction in the last 24 months after the brand entered North America in third quarter of 2024. Leading major aligner brands such as SureSmile, Spark Aligner, and ClearCorrect are all battling it out for the #2 spot in Germany's share of search market. However, once again, AngelAligner has succeeded in demonstrating a strong traction during the last 18 months, overlapping with the brand's entry in the German market and in line with insightsZ's predictive analysis outcome. SureSmile and Spark continue to compete closely for the #2 position in the share of search market. The homebrewed brand Nuvola briefly gained momentum in H1 23 but declined thereafter. Occupying the #4 spot, ClearCorrect has demonstrated particularly strong growth in recent periods. However, we suspect that it's potentially linked to performance marketing. Last but not the least, AngelAligner has shown solid traction in H1 25, signaling rising market interest.
In Spain, SureSmile and Spark remain in close contention for the second position in share of search, indicating an ongoing battle for visibility and consumer consideration behind Invisalign. The locally developed brand Geniova has demonstrated strong growth momentum, overtaking ClearCorrect and reinforcing the value of localized market strategies. AngelAligner's steady upward trajectory over the past 3 years signals increasing brand awareness and adoption potential, while Smiler's declining performance suggests challenges in sustaining brand relevance and differentiation within a competitive landscape.
In Brazil, web search trends highlight the steady ascent of SoSmile, a homegrown brand that has emerged as a dominant player and now holds the leading position just behind Invisalign. SureSmile has struggled to sustain market relevance, while ClearCorrect has maintained a consistent presence in the third position. More recently, AngelAligner has begun to gain traction, with its share of search showing gradual but noticeable growth over time. In Australia, SureSmile retains its position as the second most searched aligner brand, while Spark Aligner has clearly surpassed other competitors to claim the third spot. ClearCorrect continues to experience a gradual decline in visibility, reflecting a sustained downward trend in recent years. Meanwhile, AngelAligner has begun to gain traction, becoming increasingly prominent in the search landscape by the first half of 2025.
In 2024, AngelAlign launched a comprehensive early-stage orthodontic treatment portfolio including K1, K1 Pro, and Kid Max, catering to the full cycle management of teeth, jaw, and oral function at different growth stages. Setting a global benchmark in terms of product development, the company even launched Anti-Caries Kid, which integrates the dual functions of tooth correction and protection. Unlike AngelAlign, the market demand for Invisalign clear aligners in teens and growing kids demographic remained soft in APAC as well as EMEA. In 2025, AngelAlign launched the Kid Aligner system at AAO in US. The system is described as a 3-in-1 solution, combining dental alignment, jaw development, and functional therapy for growing patients. In the Chinese market, Kid continued to witness high single-digit revenue growth on year-over-year basis, demonstrating strong market recognition of early orthodontic treatment in the country. In September 2025, Align Technology announced that it has filed a complaint with the U.S. International Trade Commission against AngelAlign for the unauthorized importation and sale of clear aligners that infringe Invisalign's patents. The complaint alleges that Angel's aligner products, without authorization, incorporate patented technologies developed by Align Technology. The global category leader is seeking an exclusion order to bar the importation of infringing products into the United States and a cease and desist order to halt the sale of infringing products already present in the country. This is the latest in a series of legal actions that the maker of Invisalign has initiated against AngelAlign, including August filings in the U.S. District Court, the China Intermediate People's Court, and the European Unified Patent Court. InsightsZ maintains a policy of not commenting on active legal proceedings. However, we believe that it is important to underscore the legal and market risks currently facing AngelAlign in the U.S. market, especially as these factors could influence the company's competitive position, regulatory exposure, and overall outlook as it seeks to expand its presence in North America.